man, you think about the average retail portfolio out there, they're still waiting for the next takeoff of AI. And you're like, guys, I'm not telling you to wholesale switch everything out of your portfolio. What I'm saying, make your portfolio look like a balanced, diversified portfolio always has.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk and possible loss of principal capital. Please seek advice from a licensed professional.
And we are back with another edition of the Daily Dots, and I am joined as always by the brain trust himself, Mr. Chase Taylor. Boy, a lot of different ways to go today. 102, market just closed. Let's go through the indexes. Let's see. Tell us what happened.
Yeah, so we closed at up 0.26 for the S&P, up 0.33 for the Qs, up 0.87 for the IWM. I think the Russell's beaten the S&P like 9 days in a row now. I think it is.
Wow.
Mag 7 was up 0.18, so lagged again. XUS was up 0.16, though EEM was up a good bit more than that. Dollar up 0.33, and that did close above the kind of first important level of 99.22. So next up would be 100.21ish. But that didn't seem to mess too many things up today. I think the big story today was oil down 5%. And I think that's something we should probably dig into. Gold down about 0.5%, silver up about 0.5%. Other metals kind of mixed. Yields, the 2-year was up 5 basis points. The rest of the 10-year was up 3, then the 30 was pretty flat. TSMC was the big equity story of the day, growing leaps and bounds, did well today, kind of helped bring up NVIDIA. NVIDIA's up 2%, but you still had Apple, Google, Microsoft, Tesla, all red. So vol was down about 2-3%. And as mentioned, EM was up 0.6, so pretty solid outperformance.
Especially the way the session started, because when I first looked at, we weren't getting pounded or anything like that, but when I first looked at the markets, watching the open this morning, it felt so reminiscent of so many trading days over the last 10 years, right? Like all the stuff that we've got that we believe in was like flat to red. We're basically down a little bit at the open. Qs rip, and then just throughout the course of the day, it just swung back the other way. And it's this type of action that makes me believe that we're not out of the woods yet for the market here in the first quarter. I just, you had that pop yesterday looking for they got hit yesterday.
Yeah.
Looking for that bounce back, looked like you were going to get it strong, and then you just dissipated throughout and you could see the rotation back to the stuff that we're advocating throughout the trading day. So, but let's jump into the oil, because we both had busy mornings this morning, and we haven't really had a chance to discuss it. What do you make of it?
Yep. So what this all comes down to at the end of the day is the Iran story. We're not going to do anything like as far as airstrikes or whatever. And I think the market had gotten to the point where it was pricing that in pretty heavily for good reason. We were moving assets out of the region, telling people to leave, the whole 9 yards. It looked like, okay, well, this is happening. And then it's not happening. So oil down 5%, which you would expect to give up that geopolitical premium that crept in. To me, it's getting interesting though, because you're still above the 50-day. You're still above where you'd been the last few weeks. So if it can kind of stop going down here and then kind of matriculate up, big deal, especially because no one's going to expect it now that the Iran premium got wiped out. But obviously there's a ton of supply still around, so it could easily just be right back to the grind to the 40s. But looking at least EIA thinks that U.S. production is actually about to start dropping. If that proves correct, then I think you actually can bottom in oil, which would be obviously a pretty notable thing to happen for macro and for oil. But
what is it? Is it they're predicting a drop in production just due to price? Or
I don't think necessarily, because you've been
I know it
because you've been down here for a while.
I know.
obviously you can't look at rig count because they're so much more efficient these days. The rig count became a useless metric. You know, the CEOs have been warning for the last year, like, yeah, we're about to pull back. And then it's like, you keep looking at the production data. I'm like, I thought you said you're going to pull back. There have been some like small signs, like maybe they're actually starting to mean it, but yeah, $50 is one thing for, you know, a few months. It's another thing for most of a year. And then obviously we've gotten the signals from policymakers, especially the president. They wanted it $50. So some people, obviously we talked about before, think the Venezuela stuff brings it down, which I don't think it will. But yeah, it's tough. But there's also a lot of other supply disruptions that may or may not last. I mean, Venezuela themselves, like their production has gone down. You've had problems in Russia and Kazakhstan. How long does OPEC want to stay at $50? You know, probably not that long. So there, as other markets go, it is a lot of moving parts that can all change. I want to check out the latest Macro Voices has the commodity context guy doing talking about oil. So that I want to check out. Haven't listened to it yet, but he's my favorite dude on oil. So
how much sway, you may not know an answer or may not know this, but how much sway, if any, do you think a guy like MBS has over OPEC?
Significant.
Okay, that's what I thought. That's what I thought.
Whatever that guy wants the oil price to be, he can make it happen. I mean,
well, and that's part of the calculus that I think you got to bake into it. I am not a geopolitical expert, certainly not an oil expert, but Trump and MBS have a pretty congenial relationship, and you've been saying this for quite some time, but it's really clear to me that OPEC via MBS is doing him a solid.
For sure.
By not, I mean, we've watched these markets for long. You get under pretty much $70 a barrel, and I feel like, you know, $65 a barrel almost every single time I've seen that over the last 15 years. OPEC's pulled back,
right?
You know, cuts production,
and they added into this when it was not a healthy market to add into. Like that, they kicked it while it was down.
They're scratching each other's backs, MBS and Trump.
So the question becomes, for how long, right? Was the original deal for a year? Was it for 2 years? Like, if you look at the data, like this hurts Saudi Arabia.
It does, but it's really interesting calculus because MBS and Trump are really interesting odd bedfellows because they have very aligned interests, at least on a lot of issues. For instance, you know, and please do not get me wrong and, you know, think I'm sitting there saying that MBS is a choir boy, but he is by far the most sympathetic and the most aligned with the West of any of those leaders you've had. I think it's very clear. He's made it very clear that I think he wants to get, you know, his country, but the region as a whole out of the dark ages of Islamic extremism. And the way he and Trump have cooperated is interesting. It's just odd bedfellows. You know what I mean?
So I think he played a significant role in us not hitting Iran.
I'm sure he did.
All the Gulf states basically pushed hard to be like, don't do this.
Yeah.
And in fact, the Saudis went out of their way to say, we won't let the U.S. use our airspace. They told Iran, like, not only are we not going to take any part in this, we won't even let them use our airspace for this because they didn't want to get hit back, you know, and after we did something, because probably that's what, that would have happened. And they've really tried hard in the last like 2-3 years to have a better relationship with Iran, like notably improved bilateral communication and stuff. So I think that shows that relationship there. Like, I think, you know, Trump decided not to hit Iran for not just that reason. There's a lot of reasons, but I think it played a role. So it shows that relationship. But you're talking about a country that's a massive commodity exporter, and now they're running a current account deficit because oil is so cheap. They're having to borrow money hand over fist to just keep normal stuff online, in their own government budget. So this hurts. So I'm assuming the back channels, the backroom stuff between the U.S. and the Saudis is at least getting more interesting from a like, hey, we've done you a solid for $50 oil, but this is starting to sting us. So we got to start moving it up soon.
What do you think? What do you think MBS's relationship is to the Iranian regime and the Ayatollah? Are they friendly?
No, I just don't think they want to be enemies.
Yeah, that makes sense. I mean,
at the end of the day,
yeah.
if you think about go back to the extremism from that emanated from Saudi Arabia, uh, because it's not like that anymore. And I think at least the Saudis recognize like maybe we should stop exporting terrorism.
Bad business model.
A big part of that is the tensions between your sect of the faith and then the Iranian sect of the faith. Well, if you're less in your face, religious about it now, like we have less reason to be, at their throat just because they happen to be Shiites or whatever. Like you can kind of look at it from a more realism standpoint. And I think that's where they're at. Plus, like, what is the upside to being at each other's throat in the region whenever you're trying to like modernize your economy? Like the big threat to modernizing your economy is a bunch of missiles coming from Tehran.
Yeah, that's kind of a way of doing the opposite.
Yeah,
right?
They're trying to bring in a lot of international capital, international technology, and if there's one thing international capital is not interested in, is that, right?
Yeah, it's Iran is such an odd one. It's we want to bring in international capital.
I'm talking about the Saudis.
Oh, the Saudis. Yeah, I just look at the Iran situation is so odd. Who benefits? It's
the same as Venezuela. The people in the regime benefit.
Yeah.
It's always weird to watch a regime hurt their own people to benefit themselves. But that's world history, though.
But from my understanding, the current Ayatollah, certainly the last one was. Let me say it this way. Certainly the last one. I don't know a lot about this new guy, but certainly the last one, at least the perception was he believed his own bluster. I mean, he wasn't riding around in Bentleys with Christian Dior. You know what I mean? Like he wasn't doing the enrich myself, all that kind of stuff. He was a hardliner. He believes it.
You got to realize too, though, there's a lot of powerful generals and stuff that may or may not be a bigger part of the superstructure than it looks like. So
that has to be the case. That has to be the case. And the reason I say that is because the guys with the military power at the end of the day are that's where the rubber meets the road, right? In a situation like that. And unless those guys are getting their beaks wet or on board in some way, they wouldn't want that is the only reason that they would stand by. I mean, especially all of them, right? From our knowledge, we haven't had any significant military figures. I don't want to use the word defect, but effectively, right? Like not cooperate with the leadership of Iran.
Right.
We haven't seen it. We don't know.
Seems to me like it's always been run pretty tight.
Right. I can't see that being the case if they were not getting their beaks wet and if they did not have a much bigger role in the power structure of Iran. Because why would those guys go around with the repressive actions of that regime if for instance, I do not believe that the average Iranian soldier is that loyal to the Ayatollah.
Well, that's why they have two militaries. One that's there for the Ayatollah, one that's there for the country.
Exactly. Exactly.
And one of them is the one that gets the power and the money.
Right.
The other one's kind of like, eh.
Yep. Yeah. And it makes all the sense in the world because you're sitting there. The only way I think that Ayatollah, probably pretty smart play by him, but the only way he'd still be in power is if the military is still back in his play. And I just don't see any reason for them to do that unless they were getting some goodies behind the scenes.
Yeah. And there's not a functional, and it's because they've not allowed it to be, but there's not a functional, opposition. Like so often in countries like this, you don't have an opposition that can rally enough support, like for like real life support among the people. It's like obviously the people don't like the Ayatollah, like it's pretty clear, or the current system. But is there some big thing that they're just totally ready to back? Not really. Mm-hmm. And I think this is an area where like obviously it is unseemly the way we're just backing a different person in the regime in Venezuela. But the reality is Machado probably can't command the country, just like here where a lot of U.S. politicians are elevating the crown prince, the Shah's son, and this dude has lived in Washington D.C. for 40 years. He left Iran when he was 17 years old. Like
Well, not to mention the fact that the Shah was a puppet of ours, meaning
Right. So to think there's a plurality of Iranians ready to back that guy, come on.
Yeah, he was more Western friendly, but I mean, if you're looking at it from an altruistic lens,
Too Western friendly for Iranian people.
yeah, well, yeah, because I mean, the Shah is just our version of the Ayatollah,
Right,
meaning
exactly.
he wasn't picked by the people either.
Exactly.
And it is so Western biased to sit. Well, of course they want the Shah's son back in power.
Yeah.
Like, no, they probably want democracy. They probably want to pick who they want.
Right.
We've tried the whole telling them what they should want,
Right.
and I don't know if you didn't check, but it hasn't played out very well. You know, that's one of the frustrating things. I think the arthritic and outdated. It's like U.S. politicians continue to look through a lens that is just it's so outdated.
The who's who's all had a meeting with the crown prince in the last like week or two, and the photo ops and everything. It's like, come on, man.
Oh my gosh.
And he's like, I'm gonna go back. I'm ready to like lead the charge. And it's like, no, you're not.
Dude. Paul. I don't want to get on a political diatribe here. Not starting to feel. It's really hard for me to think about anybody in the political class, and I'm not just completely disgusted by. Anyway, okay. So what else did we see today? We had that. You know what I was thinking? You and I were talking about this the entire time, but watching the run up specifically in Google and TSM over the last year and a half, I should be a lot more happy about it than I am. Do you know why I'm not? I'm not, and we got to do this. You know, we got to do it. You and I talked about it. Had we had our druthers, I think we probably would have been like 25% TSM and Google. Remember those talks you and I had?
Yeah.
We just wanted to back up the truck. We maintained as big a position as we could carry in those things. But, you know, the reason I bring that up is I think it's a perfect example. And if any of, maybe there's people out there listening that were chasing some of the AI names and all that kind of stuff. Go back and look at some of the hot stocks. I mean, we can find a Palantir or something like that bucks the trend. But go back and look at some of the hot stocks. For those of you that value investing's dead, we got to chase the hot stuff, all that kind of stuff. Go look at some of those hot stocks over the last 13 or 14 months and then compare them with the performance of a Google and TSM. There's probably not many that outperform them. And the thing I love, you know, it's why fundamentals matter. Right? Like you were able to generate those kinds of returns, incredible returns, making relatively very safe bets on very established, cheap companies. And I mean, I obviously love it. I'm talking my own book and I'm biased, but just I keep waiting for that reflexive move. It's the scar tissue kicks in. You're like, is this going to be the day where all of our stuff just falls out of bed and tech just takes off again? It's just not happening, man. And I think that bell has been rung. And I don't think you're getting that genie back in the bottle.
And to go back to yesterday's conversation of like, hey, if the economy starts burning a little warmer, like that may actually be bad for them. Today, you got Empire Manufacturing, Philly Manufacturing came in really warm. Initial jobless claims under 200,000. So like,
wow,
it actually looks like the very early, but it looks like the labor market could be finally stabilizing and maybe even picking up a little bit. If that's the case, then, you know, inflation starts picking back up later in the year. Growth will be really good. So like this kind of stabilization in the economy itself and warming back up part is happening. And I mean, the 2-year yield is up 5 basis points today. It's telling you like, oh yeah, not only no more cuts, but like, you know, like this could turn into like, oh, do we have to do a hike question? Even if it doesn't happen, if they start having to think about it out loud, like all that stuff's big, you know, dollar kind of putting in a multi-week high all of a sudden, like all those things other than pure like AI earnings, like they weigh on tech. They just do. And then, yeah, like your more industrial stuff, it's like, cool, growth, let's go, you know, versus this stuff that, you know, AI doesn't really need GDP growth, but, you know, if you're selling cement or something, you do.
Yeah. Okay. Couple different things, couple different directions we could go. Well, what specifically did you caught your eye today?
The biggest thing to me was oil, but it's more of a gonna catch my eye moving forward thing. Just this is the first time, this week is the first time I felt like oil might actually be trying to bottom since over a year ago. So like, I'm just gonna be watching like a hawk to see, can you actually stabilize here and move an inch higher, especially now that the Iran risk is over and no one expects it, or is it just, you know, a quick little false dawn and we do have to wait for the 40s, or we at least have to see that confirmation that U.S. production, you know, that okay, never mind that, you know, they're not going to do it or they are going to do it or whatever. That's the biggest things for me, honestly. I didn't check on banks today. I know I think Goldman came out, and Goldman and Morgan Stanley both had pretty good earnings, so maybe that was able to actually stabilize. Let's see. Yeah, not really. Well, XLF was up 0.4, so better than it had been, but you're now, so year to date, you're actually down about 1% on the financials ETF. So it's not terrible by any means, but also not that strong. Another day of the EEM versus SPY ratio moving even more. The ex-US direction. So,
I'm blanking out. What was the one? What did you say just before that?
EEM, SPY.
No, right before that.
Oh man, I don't know.
Oh, I don't know. I got too many things zipping through my head right now. Yeah, the dollar is interesting to me because if you'd have showed me the last 2 days on the dollar, I would have thought you'd have seen more. Metals are behaving. This is the most obvious statement ever. But I think one of the easiest ways to see the sign change in this market is look at the way that metals and miners are behaving. It's completely different, even than it was 6 months ago. You know, I think that value story is penetrating the market. I think people are starting to understand this better. The opportunity is not even close to gone. But it's kind of, you know, it feels like this year's sort of unfolding like we thought, which it doesn't surprise me when things unfold the way we think. It usually surprises me when they unfold the way we think. You know what I'm saying? Like in the same timeline, in the same way, and all that kind of stuff. And it's kind of like we said, we didn't see a big dramatic drop or anything from US. We just said, we think we're going to keep seeing assets spreading around the world, and it's just going to be a dampening effect on markets. And here we are sitting there, you know, we're up over 7% on the year. A lot of international markets are up 8, 10, 12, 14. Here we are. The S&P is just barely hovering above flat. I don't think it's even up 1% on the year.
Yeah. Speaking of,
it's just weird to see it play out that way because, like I said, it usually doesn't, you know, even if you get it right in terms of what's going to happen, it usually doesn't do it in the same motion and the same rhythm that you're thinking. But, you know, every single passing day, and we've issued all the caveats, right? It's just only one day. It's only 1 week. But this has been very consistent. You know, you just keep seeing rallies getting sold in the typical U.S. stocks, especially the ones that are overowned, right? If easiest trade out there coming into the year, the easiest, lowest risk trade out there would have been short S&P, long even weight, right? It's probably not the best advertisement for our firm to say, man, it's odd that things are playing out the way, but it's, again, you know what I mean? Well, we're shocked we got it right.
It felt like it never happened. So,
well, no, I mean, we get it right a lot. It's just very often you get it right the way you think it's going to get. You know what I'm saying? It's always, and what's been odd to me about this is there's just been no curveballs. It's been exactly kind of like we thought it would play out. And I think that's great news for investors because the advantage of it playing out the way that we're playing out. I remember having this conversation 14 months ago. And I believe it was you said something like, you know, it's probably not going to seem too violent or too exciting. And all of a sudden you're going to look up and go, whoa, we're up 20% on the SPOOs. You know, we're up 15, 20% on the Qs. And that's just kind of the way it's been. You know, I had a comment last year where I said, we're having a really good year, but it's kind of boring. And people, what do you mean? And I go, well, we haven't done any, you know, we've had some moments before where we've had some great pivots, some really dramatic trades. And, you know, it's kind of been just buying stuff that's undervalued and just holding on to it, you know, and you just watch it just pulling away and it just keeps pulling away. And it makes sense on a fundamental valuation basis. It just hasn't mattered for so long. I feel like it's like, I feel like I've got like PTSD, you know what I mean? I'm just keep waiting. I feel so confident about the stuff that we own. And I like so much of the stuff we own, but you're just like, it's as weird as it sounds. It's difficult to trust the fundamentals.
Yeah, it feels like it's dark and you hear something in the bushes every time something happens still.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ.
To go back to your point, though, I haven't given the little scoreboard update in a while. The S&P's up 1.5 year to date.
Okay, it's up a little more than I thought.
There are 16 countries up at least 5 and 4 up at least 10. So Peru is up almost 15. South Korea is up 14. Colombia up 10.5. Turkey up 10. You have the Netherlands up 8. Hong Kong 7. South Africa 7. Greece 6. China 6. There's a lot of stuff just like last year that is not just kind of beating the U.S., but like really beating the U.S. At the moment, the U.S. is beating 10 countries. So out of 45 that are tracked. So kind of where we were most of last year.
Yeah.
Now, obviously, Peru, Chile, if you overlay the copper chart with their with their equity chart, it's the same chart.
Well, so, but
that's kind of the point.
That's the point,
right?
Yeah, just that all of these things that we basically decided over the last 15 years that one sector is more equal than all the other sectors, and that's the only one that we're really going to pay attention to, and that's what caused this giant dislocation. And you knew that, like everything else in markets, and I know you find it fascinating too, but it's one of the things that fascinated me about markets. Markets are 100% reflexive over a long enough timeline. Right? It's going to feed back through.
Right.
You will eventually see the inverse of that giant move. And, it's too early to say that that's what this is. But I feel with each passing day, it's becoming less early. Meaning I'm not going to sit here and declare it right now, but it sure looks to me like the new trend has started. A new way it's going to work.
Yeah, there's a commodity cycle, an EM cycle that it would be very difficult to say they were old,
Well, and one of the this is kind of getting into the philosophical side of it, but one of the interesting things and I think there's a variety of different reasons that this occurs, but I think one thing that we do know about modern monetary policy is it lengthens cycles, right? And of course it does. It's designed to, right?
Right.
If the guys operating the monetary policy, the central bankers, their goal is to eliminate recessions. Now, I think that that's a foolhardy goal, and I think it ends up causing more problems. But I think we're starting to experience the flip side of it is, you elongate cycles. By definition, you're going to create abnormally good opportunities on the flip side, right? And I think that that's where we're at. I think you're starting to see that other cycle come around through force, right? You just got two, like you and I were talking about last year. You can't time these things, but there is a point where the deltas between valuations, where you go, okay, I can no longer justify that. That's insane, right? $1 in the US is not worth 7 cents everywhere else in the world. It's just not. And again, when you get as extreme as we got, it's so hard to determine that tipping point. But I think that's where you rely on the charts. And when the fundamentals and the charts are all backing it up, it's not very often that those are wrong.
Yeah. And again, the scary thing is that people really haven't taken their money out.
I know.
I know.
And
I kind of don't even want to know what it looks like. If people say, I want my check.
Well, you go and look, talk to some folks, float around social media, even listen to people on CNBC. The question isn't about whether the rotation's happening. The question is, when is tech and AI going to take off again? And I'm just sitting there going, I don't care if it does. What about tech and AI in the rest of the world? Right? What about the Alibabas and the Tencents and the JDs and all the stuff that you and I know and the BYDs? How does AI not help them? I just think the bloom is off the rose. And I think that enough people know what we're talking about that I think the other thing too is we don't have to get the majority of people to know because things were so off balance. It was so off sides. Like you and I were saying, we don't need the majority of investors to swing our way. If we get 3 to 5%, that's enough.
Yeah.
Right. And then that will precipitate others and it will just kind of be this gradual thing. But like you said, man, you think about the average retail portfolio out there, they're still waiting for the next takeoff of AI. And you're like, guys, I'm not telling you to wholesale switch everything out of your portfolio. What I'm saying, make your portfolio look like a balanced, diversified portfolio always has, right? A good portfolio is not 98% US assets. It's not never has been, right? It's just, it worked. Take your win, spread your bets out.
Yep.
What you said, I said something, you went,
Oh, yeah, you mentioned BYD, and it made me think. So one piece of news that dropped today, well, not news, but and then we can leave it there. But was President Trump talking about how open he was to U.S. To Chinese auto manufacturers coming here. So he's mentioned that before, even on the campaign trail. But like it was kind of reiterated today, and the Chinese just did a big deal with the Europeans to get in there. Mark Carney is in Beijing like all week this week. So something's going to happen between Canada and China. So it seems like the opportunities for China to do more business abroad and things like that are going to open up. And I want a BYD Shark. So, hopefully a BYD factory comes to town.
A Shark?
That's their truck.
Oh, that's the truck.
Now, I want a bunch of other stuff too. Let's be real. I want the flying cars from Xpeng and stuff too. But hey.
They don't make a car that can double as a boat, do they?
No, but I mean a flying car. Who needs a boat when you can fly over a river?
Miguel wants to float. One of our advisors, his name's Miguel. He's my cousin of mine, but
it's pretty sweet.
No, it is.
And I want to do tank turns. I'll give you that.
Yeah. I'd
like our parking lot in the back here requires tank turns. So
I want to be able to jump over a spike strip in the road.
That too.
Oh, and while I'm doing 300 miles an hour. That's what I'm looking for.
Fair enough.
So, and it only costs you $250,000.
Yeah.
Right. They're selling
in China anyway. So I was doing some research. Like a lot of these cars will be $25,000 in China. If you want it in Europe, it's like 50 because all the tariffs and the taxes and the, once you get through all that. So even if China does do some cars here, there'll be more than you would buy it in China, unfortunately.
We all know
we're like,
this.
Cool, that's a good price. Have you thought about adding red tape to your price?
It's I've been very hard on China, and there's aspects of them that I will always be really hard on, that I don't trust, that I don't like. I'm not sitting here, but let's just talk just purely economically. It is anathema to me. It blows my mind every time I see it about how much more capitalistic on an economics basis that China is versus the West. Like you look at Europe.
In some ways, yes, for sure.
How long is Europe going to cut their own throats?
Well, I think Europe's being the smart ones by actually partnering way more with China than we are.
Well, yes, I do. But what I'm saying, like I'm using we're going to double the price of a car just through red tape and nonsense.
We don't even let them in here. So
no. I realize that. Yeah. But if we did, we wouldn't be doubling the price on tariffs and all that kind of, I'm just, man, I'm just a big believer in markets. I'm just a big believer. And when it shocks me to see the West, who's benefited from capitalism and free markets more than anybody. And all of a sudden it's the boogeyman.
And last thing, I promise. I don't think there's a political party really left in the West. In the US, there's not, Republicans or Democrats. I don't really see any in, Australia or Western Europe or anything that are like really, truly pro-market.
I know.
And I don't mean not putting, some barriers around markets to make sure they don't go crazy, because I'm not a pure.
No, you can't be.
I think in the US, we're just turning our back on markets, and it's bipartisan, which is frustrating.
Well, because we decided, 0809, we decided we didn't like market conclusions.
And once you go down that road, man, it's hard to not just keep adding to it. So.
No, I mean, and we're not the only ones that have said it, but that's why we've been saying for the last 15 years, hey, you start this, it's an economic roach motel, you're never going to get out. And we took so much flack over that for years. Oh, getting out of queue, it'll be like watching paint dry. Undoing this, right? Yellen's quote. Sit there, and that was 10 years ago. She said that 12 years ago. And at the time you're going, you won't ever get out of it.
It was like Bernanke even before that being, saying like, oh, well, it's not really money printing because we're going to pay it back. Like, yeah, I don't think you will.
And at that point, his balance sheet was 880 billion. Today it's 6.5 trillion. So he hasn't started paying it back yet.
They always pay back a little bit before they run it up again.
Well, and it's just, it's too, I think a really good analogy of that is go give your kid $10 million and sit around and wait to see when they're going to launch their career.
Right.
You know what I mean? They're not going to.
My parents would have still been waiting on mine.
Yeah, exactly. I mean, I wouldn't be sitting here right now. Be on a beach somewhere. Well, I probably would have blown all the money by now, but All right, guys. Hey, we got to run. That's it for us today. As always, you can follow us on social media. I'm at KYR Radio on Twitter. Chase is at Pinecone Macro. Get the video feed on YouTube. Just Google Know Your Risk Podcast. You guys know the deal. We'll see you tomorrow. Have a wonderful evening. You're listening to the Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.